Hey, Quarterall. Jav. Well, if you want to see the trade that brought me back, you can watch that on YouTube a little bit later. 12 grand. I'm still not there yet. I'm not there yet, but I'm in at 69. I'll put this at 50. Or 49. It's good. It's good enough. Well, let's have a look at the SPY. The SPY's had a bit of a comeback as well in the last couple of minutes. So FOMC meeting's obviously going ahead right now, and I will stream the conference at the half an hour. We've got the conference call in half an hour. What I'll do is I'll bring that down here. $75 base points. Why the market's rallying by that? Because of that. 75 base points. That's why it's the decision. But there you go. 0.75 base points. FOMC rate decision. Fed raises interest rates by 75 basis points. We'll put the conference call on live at the bottom of the hour. Hopefully. Oh, we got stopped out. Okay, no problem. But we're 800 down on the day. We hope to capitalize on some of this now. Right. Okay. I've just come back to my desk as it happens. I'm not going to take a trade until after the conference call, but we can chat about it. No problem at all. This is the S&P 500, the market as it were, and away we go. Hey Alfred, how you doing? Look, I'll be happy to get green today, and I'm confident I will. Hey, baby girl, I'll take you out afterwards, okay? I'm enjoying a glass of wine, exactly. I've just had my dinner. And I jumped on. I've just opened the stream. I took 1,000 shares. I saw British Aerospace pumping up. Forgot about the that it follows the market. So I took 1,000 shares, given that I made 12k earlier on it, and I thought, okay, I'll get me green. Didn't quite. I got stopped out. Just lost a little bit, but look, it is what it is. So I've just had my dinner. I've got a glass of wine to go with my dinner. Nice glass of Rioja. I'll say a nice glass. It's a cheap glass, but it's palatable. We'll stream the FOMC rate decision live at the bottom of the hour. In 20 minutes, the conference starts, so we'll stream that live. We know what the decision is, but Mr. Powell himself can very often talk the market into a bloody suicide pact. The guy's a walking Adderall. Mazepam. The walking Quaalude. In the meantime, Let's have a look at what's moving on the back of that. Fours are still moving up. No, it's choppy sideways. I'm looking at the 5-minute chart. Look at the 5-minute chart. It's choppy sideways. Probably not worth even looking at, really. We lost money on Arcturus, but it's coming back now. So if it gets over the VWAP, this could be interesting. What else did we lose money on today? Chegg. Yeah, that's not coming back. But everything's taken a pop with the FOMC decision, so that could have gone either way. It probably wouldn't have been worthwhile taking a long position ahead of it. Yeah, well, 75%. Well, 75% is expected. 50 would be good. 100 base points would be terrible. Shroomy. But 75 is what's anticipated, which is why let's have a look at the market. Let's go back to the market, which is why it's moved up, but it's not moving up huge amounts. It's gone green on the day. I mean, moving up huge amounts would be like 150 points up, so like 1.5, 2% up on the day. It didn't go that far, so we're up. We're coming back a little bit now. We're 0.5% up. But yeah, surely 100 base points would have been bad. 50 would have been good. 75 was expected. So kind of middle of the road. What are we going to do? So Noah, that's not made any moves. What am I looking at the 5-minute on there for? So I do need to look at the 5-minute to get rid of these lines. So look, we've got quarter of an hour, 15 minutes, and then I'll show we'll stream the Fed minute meeting, and then I'll trade for the power hour. So we've got the half an hour after the Fed minute meeting, and I'll trade power hour. So it's had a pump up. Let's see what the meeting says. But I still think we will sell off after the news has come out. I still think we'll sell off after the conference opens, the live stream opens. But we'll see. That's just my opinion. Everybody's entitled to opinion. Everybody's got an opinion. Like assholes, as I said earlier. You don't need to show them out. Everybody's got an opinion. Opinions are like assholes because everybody's got one. You don't need to display it on the internet, but many people do. Certain people do it for a profit. So guys, 75 base points. Do we think the SPY will continue rallying, or will it sell off when Powell starts to send us all to sleep? One trade. Don't worry, I'll be showing the trade live. Well, not live, but I recorded the trade, so I'll be showing that trade on British Aerospace, on Boeing. But yeah, I always think British Aerospace. I don't know why. I'll be showing that Boeing trade, Alistair, on the trade recap later, so you can watch that later. 12k trade on Boeing got me within touching distance of going green. So we'll see. Oh, well, I called it out in the Discord. I did call it out. No, Art didn't play out. I ended up losing $6 on that jack. So 7.5 on Chegg, $6 on Art, but I made just over 12k on Boeing. So I'm not far off getting green on the day, but we'll see. Hey, look, I purposely, in case you hadn't noticed, I purposely didn't withdraw any funds from the brokerage at the end of October. October even. I purposely didn't withdraw any because I wanted to, if I got caught any wind of any momentum, I wanted the ability to go big size and be really aggressive this month. I want to be able to hit that. I want that goal hit in November. I want to be able to just trade the early part of December or even do a small account challenge in December. I want to trade the early part of December with kind of stress-free and take the back end off. Take Christmas and New Year off. So, I called it out in the Discord. It was, to be fair, we got that initial pop. It was very volatile. We got the megaphone pattern. As well, which if you've seen the tuition, the megaphone patterns, it's an indecision, but typically it's a continuation pattern. So if it's the top of the megaphone pattern, if it's at the top, it usually continues upwards, and if it's at the bottom, it usually continues downwards. So we've got the megaphone pattern, and we're now selling off now. So we've got 10 minutes to the to watch the live. I'll use. So this is the music. It's pretty much the same music that I was using, but this is the music from the press conference, the FOMC press conference, which starts in a little over 10 minutes. Why did BA pop? But they released order numbers of the aircraft that they will deliver in 2023. Yeah, absolutely, Neville. Actually, that's a good call. That's a good call. I'm going to top up with the power hour. We're ready for this. Yeah, so after I took the Boeing trade, I went out, did some shopping, came back, and had some dinner, hence the wine. We're considering we were at 13 grand down, 800 down is a win. We're not going to finish there, by the way. We will be taking some more trades if they present themselves. I think once we've had the conference, there's going to be an influx of volatility. So I think there's probably still some opportunity to have a green day today. Will I get over goal? I doubt it, but hey, there's time. It's not the first week. I can remember doing a power hour stream not too long ago and doing about 18,000 on Veru in Power Hour in the last. I think it was in the last 15 minutes. So. Oh, look, that's fine. Okay, send it over. I'll there's my PayPal details are in the link tree, Alfred. Donate to me on PayPal. And anybody that comes on the stream and says you were 13,000 down, how the hell have you managed to get to within 1,000 of profit on the day? Just go and subscribe to my YouTube channel. We're dropping a trade recap later, which will show the trade in pretty much real time. I'll edit it so that there's you're not watching it for the full, whatever it was, 20, 30 minutes. But I think it was 16 minutes actually. So I want to get down to less than 10 minutes so I can put it on TikTok and do it that way. No, actually, it's just a cheap Rioja tonight, Alistair. I went and did some shopping, and I just got a couple of bottles of cheap red. Just a cheap Rioja tonight. Spy. Coming down. I'm not taking. I will be wary, and this isn't financial advice, guys, but just be wary of taking any trades before this FOMC conference, because as soon as this press conference starts, the market will get volatile, and depending what Powell says, the market go one way or the other. So whilst we're anticipating, I think most of us are anticipating a bit of a sell-off, hence the initial rally once the numbers came out. Market makers expecting a sell-off once he starts opening his boring trap. Is anybody on YouTube? Very quiet over there. If you're on YouTube or Twitch, give me a hell yeah. Let me know that you are alive. Let me know you can see me. Is it worth me continuing streaming over there? Let me just continue with TikTok instead. Oh dear! I heard the news yesterday of the US. There you go. Thanks, Kai, Luke. Appreciate that. I was watching the news yesterday on the whole TikTok thing, and there's a whole bunch of people trying to get it banned in the US again because it's effectively a Chinese app. I'm like, hang on a minute. You're all probably tweeting on Apple, on iPhones. Where do you think those damn things are made? It cracks me up, the ignorance of people in power. Oh, TikTok's collecting data and it's a national security risk. I'm like, yeah, and Apple isn't collecting data, and iPhones aren't made in China. Come on. TikTok is going nowhere. Twitter is dying. Well, no, Twitter isn't dying. It's just it will die on if Elon doesn't. If Elon plays the game wrong. If Elon tries to get political under the pretense of being apolitical, then Twitter will die. People are already leaving Twitter in the drawer. Celebrities are leaving Twitter in the drawer because Elon said that you've got to pay me $12 to keep your check mark. Yeah, Streamy, 75 base points. It's much of a muchness. I think that was 75 base points was priced in. Yeah, he started off with 12. He's tweeted he'll take $8 a month. But look, the whole point of having a check mark is for verification purposes. to stop people impersonating other people, you know. But it creates a whole other issue if you then start saying, okay, well, I'll buy a check mark, because people will just go out and buy it. No, I think it was a mistake for him. He thought he could get away with, you know, because he was active on Twitter, but none of the board actually owned a significant stake in Twitter, which was a big issue for him. And the censorship around Twitter was getting to him. So I think he wanted to bluff his way into changing Twitter. It took a huge stake. And then when he entered into an agreement to buy it, I don't think he actually believed he would have to follow through on that. And, you know, hey, Armanio, good to see you, buddy. The thing is, though, with Twitter, I mean, it's got so many followers, he just needs to make a couple of tweaks and relaunch it on the exchange again next year. And not only will he make his money, wait till the bull market comes back, not only will he make his money back, he'll make a profit and be a significant shareholder in Twitter for free. So, you know, the guy has the Midas touch. And let's face it, he said he wanted to relinquish some of his shares in Tesla to buy Twitter. That was just so he could sell at the top of the market without impacting the share price. I mean, obviously it did, but yeah, get your fingers out, guys, and tap that screen between 10 and 20 times. If you're on Twitter, tap that screen between 10 and 20 times. If you're on YouTube, guys, just hit the thumbs up button. I really appreciate it. There's not many of you on the YouTube stream at the moment, but yeah. Just tap the screen, guys. Tap the screen on TikTok. Hit the thumbs up button on YouTube. We need to up the like count. Cheers, Armenia. Good luck to that, shorting that, Kareem. I hope that goes in your favour, buddy. I don't play large caps, Armenia. I've been playing large caps. That's something I don't actually do. Right, I'm going to switch over. I don't play the large caps mostly. I do the small caps. I say small caps. My sweet spot is between $5 and $30. But when the medium and large caps, if there's nothing else at play, and in earnings season, yes, I will. Like Boeing today is what I call a mid cap or mid to large cap, actually. I'm watching the S&P 500 right now. I'm going to switch over to the conference now, guys, okay? Don't worry, I'll carry on providing running commentary. Nice little double top there on the S&P 500. You can watch me drinking whilst you're waiting for Powell to arrive. Oh, dang, I wasn't recording. I think there's going to be a few sell-offs. As soon as he starts speaking, watch the market sell off. They don't like the market doesn't like him. But let's go ahead.
Good afternoon. My colleagues and I are strongly committed to bringing inflation back down to our 2% goal. We have both the tools that we need and the resolve it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised the policy interest rate by 75 basis points, and we continue to anticipate that ongoing increases will be appropriate.
I told you
We are moving our policy stance purposefully to allow
market selling.
sufficiently restrictive to return inflation to 2%. In addition, we're continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance of policy for some time. Today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed significantly from last year's rapid pace.
Better?
Real GDP rose at a pace of 2.6% last quarter, but is unchanged so far this year. Recent indicators point to modest growth of spending and production this quarter. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 289,000 jobs per month over August and September. Although job vacancies have moved below their highs, and the pace of job gains has slowed from earlier in the year, the labor market continues to be out of balance, with demand substantially exceeding the supply of available workers. The labor force participation rate is little changed since the beginning of the year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in September, total PCE prices rose 6.2%, excluding the volatile food and energy categories. Core PCE prices rose 5.1%. And the recent inflation data again have come in higher than expected. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food and has created additional upward pressure on inflation. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 75 basis points. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. With today's action, we've raised interest rates by 3.75 percentage points this year. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Financial conditions have tightened significantly in response to our policy actions, and we are seeing the effects on demand in the most interest rate sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. That's why we say in our statement that in determining the pace of future increases in the target range, we will take into account the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation. At some point, as I've said in the last two press conferences, it will become appropriate to slow the pace of increases as we approach the level of interest rates that will be sufficiently restrictive to bring inflation down to our 2% goal. There is significant uncertainty around that level of interest rates. Even so, we still have some ways to go, and incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected. Our decisions will depend on the totality of incoming data and their implications for the outlook for economic activity and inflation. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. We're taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices in the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you.
The markets have tanked since the guy started talking.
Thank you. Colby Smith with the Financial Times. On the need to slow the pace of rate increases at some point, is a downshift contingent on a string of better inflation data specifically between now and, let's say, the December meeting? Or is that something that the Fed could potentially proceed with independent of that data, given the lagged effects that you mentioned?
So a couple things on that. We do need to see inflation coming down decisively, and good evidence of that would be a series of down monthly readings. Of course, that's what we'd all love to see, but I've never thought of that as the appropriate test for slowing the pace of increases or for identifying the appropriately restrictive level that we're aiming for. We need to bring our policy stance down to a level that's sufficiently restrictive to bring inflation down to our 2% objective over the medium term. How will we know that we've reached that level? Well, we'll take into account the full range of analysis and data that bear on that question, guided by our assessment of how much financial conditions have tightened, the effects that tightening is actually having on the real economy and on inflation, taking into consideration lags, as I mentioned. We will be looking at real rates, for example, all across the yield curve and all other financial conditions, and as we make that assessment.
Hi, Howard Schneider with Reuters. Look, I'm sure there's going to be tons of confusion out there about whether this means you're going to slow in December or not. Would you say that the bias right now is not for another 75 basis point increase?
So what I want to do is put that question of pace in the context of our broader tightening program, if I may, and hit to talk about the statement language along the way. So I think you can think about our tightening program as really addressing three questions. The first of which was, and has been, how fast to go. The second is how high to raise our policy rate. And the third will be eventually how long to remain at a restrictive level. So on the first question, how fast to tighten policy, it's been very important that we move expeditiously, and we have clearly done so. We've moved 3.75% since March, admittedly from a base of 0. It's a historically fast pace, and that's certainly appropriate. given the persistence and strength in inflation and the low level from which we started. So now we come to the second question, which is how high to raise our policy rate. And we're saying that we'd raise that rate to a level that's sufficiently restrictive to bring inflation to our 2% target over time. And we put that into our post-meeting statement because that really does become the important question we think now is how far to go. And I'll talk more about that. We think there's some ground to cover but before we meet that test, and that's why we say that ongoing rate increases will be appropriate. And as I mentioned, incoming data between the meetings, both the strong labor market report, but particularly the CPI report, do suggest to me that we may ultimately move to higher levels than we thought at the time of the September meeting. That level is very uncertain, though, and I would say, we're going to find it over time. Of course, with the lags between policy and economic activity, there's a lot of uncertainty. So we note that in determining the pace of future increases, we'll take into account the cumulative tightening of monetary policy as well as the lags with which monetary policy affects economic activity and inflation. So I would say as we come closer to that level, move more into restrictive territory, the question of speed becomes less important than the second and third questions. And that's why I've said at the last two press conferences that at some point it will become appropriate to slow the pace of increases. So that time is coming. And it may come as soon as the next meeting or the one after that. No decision has been made. It is likely we'll have a discussion about this at the next meeting, a discussion. To be clear, let me say again, the question of when to moderate the pace of increases is now much less important than the question of how high to raise rates and how long to keep monetary policy restricted, which really will be our principal focus.
If I could follow up on that, to what degree was there an importance or weight given to a need to signal this possibility now, given all the concerns really around the globe about Fed policy sort of driving ahead and everybody else, dealing with their own stress as a result?
Well, I think I'm pleased that we have moved as fast as we have. I don't think we've over-tightened. I think there's very difficult to make a case that our current level is too tight, given that inflation still runs well above the federal funds rate. So I think that at this meeting, the last two meetings, as I've mentioned, I've said that there would come a point, and this was a meeting at which we had a discussion about what that might mean. And we did discuss this, and as I mentioned, we'll discuss it again in December. But there's I don't have any sense that we've over-tightened or moved too fast. I think it's been good and a successful program that we've gotten this far this fast. Remember, though, that we still think there's a need for ongoing rate increases.
I'm trading while he's talking, and I've just got green on the
some
ground
ground left to cover here, and
British
cover we will.
Nick Tamarosa, The Wall Street Journal. Chair Powell, core PCE inflation on a 3 or 6 month annualized basis and on a 12-month basis has been running in the high 4s, close to 5%. Is there any reason to think you won't have to raise rates at least above that level to be confident that you are imparting enough restraint to bring inflation down?
So this is the question of does the policy rate need to get above the inflation rate? And I would say there are a range of views on that. That's the classic Taylor principle view. But I would think you'd look more at a forward-looking measure of inflation to look at that. But I think the answer is we'll want to get the policy rate to a level where it is where the real interest rate is positive. We will want to do that. I do not think of it as the single and only touchstone, though. I think you put some weight on that. You also put some weight on rates across the curve. Very few people borrow at the short end at the federal funds rate, for example. So households and businesses, if they're very meaningfully positive interest rates all across the curve for them, credit spreads are larger, so borrowing rates are significantly higher, and I think financial conditions have tightened quite a bit. So I would look at that as an important feature. I'd put some weight on it, but I wouldn't say it's something that is the single dominant thing to look at.
If I could follow up, what is your best assessment or the staff's best assessment right now of the current rate of underlying inflation?
I don't have a specific number for you there. So there are many, many models that look at that. And I mean, one way to look at it is that it's a pretty stationary object, and that when inflation runs above that level for sure, substantially above for some time, you'll see it move up, but the movement will be fairly gradual. So I think that's what the principal models would tend to say. But I wouldn't want to land on any one assessment. There are many different, as you know, many different people who publish an assessment of underlying inflation.
Thank you.
Hi, Chair Powell. Thank you for taking our questions. Gina Smiley with New York Times. I wonder, do you see any evidence at this stage that inflation is or is at risk of becoming entrenched?
Is inflation becoming entrenched? So I guess I would start by pointing to expectations. So if we saw longer-term expectations moving up, that would be very troubling. And they were moving up a little bit at the middle part of this year, and they've moved now back down. That's one piece of data. Shorter-term inflation expectations have moved up between the last meeting and this meeting. And we don't think those are as indicative, but they may be important in the wage-setting process. There's a school of thought that believes that. So that's very concerning. I guess the other thing I would say is that the longer we have, we're now 18 months into this episode of high inflation, and we don't have a clearly identified scientific way of understanding at what point inflation becomes entrenched. And so, the thing we need to do from a risk management standpoint is to use our tools forcefully but thoughtfully and get inflation under control, get it down to 2%, get it behind us. That's what we really need to do, and what we're strongly committed to doing.
Rachel.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. The statement points to lag times. I'm wondering if you can walk us through how you judge those lag effects, what that timeline looks like over the coming months or even a year, and where you would expect it to show up in different parts of the economy.
Yeah, so the way I would think about that is it's a commonly, for a long time, thought that monetary policy works with long and variable lags, and that it works first on financial conditions, and then on economic activity, and then perhaps later than that even on inflation. So that's been the thinking for a long time. There was an old literature that made those lags out to be fairly long. There's newer literature that says that they're shorter. And the truth is we don't have a lot of data of inflation of this high in what is now the modern economy. One big difference now is that it used to be that you would raise the federal funds rate, financial conditions would react, and then that would affect economic activity and inflation. Now, financial conditions react well before in expectation of monetary policy. That's the way it has moved for a quarter of a century in the direction of financial conditions, then monetary policy, because the markets are thinking, what is the central bank going to do? And there are plenty of economists that also think that once financial conditions change, that the effects on the economy are actually faster than they would have been before. We don't know that. I guess the thing I would say is it's highly uncertain. And so from a risk management standpoint, it would be irresponsible not to ignore them, but you want to consider them, but not take them literally. So I think it's a very difficult place to be, but I would tend to want to be in the middle, looking carefully at what's actually happening with the economy, and trying to make good decisions from a risk management standpoint, remembering, of course, that if we were to over-tighten, we could then use our tools strongly to support the economy, whereas if we don't get inflation under control because we don't tighten enough, now we're in a situation where inflation will become entrenched, and the costs, the employment costs in particular, will be much higher potentially. So from a risk management standpoint, we want to be sure that we don't make the mistake of either failing to tighten enough or loosening policy too soon.
And if I could follow up, should we interpret the addition to the statement to mean that more weight is put into those lag effects than they would have been after previous rate hikes?
So I think as we move now into restrictive territory, as we make these ongoing rate hikes and policy becomes more restrictive, it'll be appropriate now to be thinking more about lag. Of course, we think about the lags are just sort of a basic part of monetary policy, but we will be thinking about them. But we won't be, I think we'll be considering them, but because it's appropriate to do so. Let me
Does
say
anybody
this,
else think it hasn't
it
a
is
clue what it's
very
talking
premature to be thinking about pausing. So people, when they hear lags, they think about a pause. It's very premature, in my view, to think about or be talking about pausing our rate hike. We have a ways to go. Our policy, we need ongoing rate hikes to get to that level of sufficiently restrictive. And we don't, of course, we don't really know exactly where that is. We have a sense, and we'll write down in the December meeting, a new summary of economic projections, which updates that. But I would expect us to continue to update it based on what we're seeing with incoming data.
On Boeing. While the market's selling off,
Chair Powell,
Boeing's
Neil
following
Irwin,
suit.
Axios.
Let's go go short.
As you look around the economy, the clearest impact of your tightening so far has been on housing, maybe some venture-funded tech companies. It's been relatively narrow in terms of the labor market, consumer demand, a lot of sectors you don't see a ton of effect. Is the pathway and channels through which monetary policy works changing? Is it narrower than it used to be? And on housing in particular, are you at all worried that you're crimping housing supply in ways that might cause problems down the road?
I don't know that the channels through which policy works have changed that much. I would say a big channel is the labor market, and the labor market is very, very strong, very strong. And households, of course, have strong balance sheets. And so we go into this with a strong labor market and excess demand in the labor market, as you can see through many different things, and also with households who have strong spending power built up. So it may take time. It may take resolve. It may take patience. It's likely to get inflation down. It may. I think you see from our forecasts and others that it will take some time for inflation to come down. It'll take
I could
time.
be
We
watching
think.
the S&P 500. I could be
so-
watching this trading
sorry, was I
SPY
getting to your
based on the
question there?
movement.
The housing part of it. Yeah. So, we look at housing. Of course, housing is significantly affected by these higher rates, which are really back where they were before the global financial crisis. They're not historically high, but they're much higher than they've been. And you're seeing housing activity decline. You're seeing housing prices growing at a faster rate, and in some parts of the country declining. I would say the housing market was very overheated for the couple of years after the pandemic as demand increased and rates were low. We all know the stories of how overheated the housing market was, prices going up, many, many bidders, no conditions, that kind of thing. So the housing market needs to get back into a balance between supply and demand. We're well aware of what's going on there. From a financial stability standpoint, we didn't see in this cycle the kinds of poor credit underwriting that we saw before the global financial crisis. Housing credit was very much more carefully managed by the lenders. So it's a very different situation and doesn't present doesn't appear to present financial stability issues. But no, we do understand that that's really where a very big effect of our policies is.
Victoria. Hi, Victoria Guida with Politico. I wanted to ask about the labor market. You mentioned early on again that job openings are very high compared to available workers, and I'm just curious to what extent you do and don't draw a signal from that. So, for example, if wage growth is slowing and if maybe the unemployment rate starts to tick up, will that make you sort of decrease your focus on job openings? What do you see? Are wages what's really important? How are you thinking about the labor market as it relates to inflation?
Stop talking. Let him talk. I'm sure.
We talk a lot about vacancies and the vacancy to unemployed rate, but it's just one. It's just another data series. It's been unusually important in this cycle because it's been so out of line. But so has quits. So have wages. So we look at a very wide range of data on the labor market. So I'd start with unemployment, which is typically the single statistic you would look to, is at a 50-year low, 3.5%. We're getting really nothing in labor supply now. We had, I think, a very small increase this year, which we had really thought we would get that back. Most analysts thought we would get some labor supply coming in. You mentioned wages, so I guess I would characterize that as sort of a mixed picture. It's true with average hourly earnings you see. So I would call it a flattening out at a level that's well above the level that would be consistent over time with 2% inflation, assuming a reasonable productivity there. With the ECI reading this week, again, a mixed picture. The headline number was a disappointment. Let's just say it was high. It didn't show a decline. There's some rays of light inside, that if you look at private sector workers, that did come down. The compensation did come down. But overall, though, the broader picture is of an overheated labor market where demand substantially exceeds supply. Job creation still exceeds, the sort of the level that would hold the market where it is. So that's the picture. Do we see? We keep looking for signs that sort of the beginning of a gradual softening is happening, and maybe that's there, but it's not obvious to me because wages aren't coming down; they're just moving sideways at an elevated level, both ECI and average hourly earnings. We want to see. We would love to see vacancies coming down, quits coming down. They are coming down. Vacancies are below their all-time high, but not by as much as we thought because, and that the data series is volatile. We never take any one reading. We always look at 2 or 3. So it's a mixed picture. I don't see the case for real softening just yet, but we look at, I guess as I just showed you, we look at a very broad range of data on the labor market.
So do you see wages as being a significant driver of inflation?
I think wages have an effect on inflation, and inflation has an effect on wages. I think that's always been the case. There's always a going back and forth. The question is that really elevated right now? I don't think so. I don't think wages are the principal story of why prices are going up. I don't think that. I also don't think that we see a wage price spiral. But again, it's not something you can, once you see it, you're in trouble. So we don't want to see it. We want wages to go up. We just want them to go up at a level that's sustainable and consistent with 2% inflation. And we do think that given the data that we have, that this labor market can soften without having to soften as much as history would indicate through the unemployment channel. It can soften through job openings declining. We think there's room for that, but we won't know that'll be discovered empirically.
Thank you so much. Kayla Tausche from CNBC. Earlier last month, the United Nations warned that there could be a global recession if central banks didn't change course. The new UK Prime Minister warned of a profound economic crisis there. And I'm wondering how the Fed is weighing international developments in light of a very strong economy here in the U.S. that would seem to be bucking those trends.
That'll teach me don't trade through the FOMC conference.
Of course, we keep close tabs on economic developments and also geopolitical developments that are relevant to the economy abroad. We're in very frequent contact with our foreign counterparts, both through the IMF meetings and the regular meetings with central banks that we have, and I have one this weekend with many central bankers. So we're in touch with all of that. So I guess it's clearly a difficult time in the global economy. We're seeing very high inflation in Europe, significantly because of high energy prices related to the war in Ukraine. And, we're seeing China's having issues with the zero COVID policy and, much slower growth than we're used to seeing. So we see those difficulties. The strong dollar is a challenge for some countries. But, we take all of that into account in our models. We think about the spillovers and that sort of thing. Here in the United States, we have a strong economy. And we have an economy where inflation is running at 5%. Core PCE inflation, which is a really good indicator of what's going on for us, is the way we see it, is running at 5.1% on a 12-month basis and sort of similar to that on a 3, 6, and 9-month basis. So we know that we need to use our tools to get inflation under control. The world's not going to be better off if we fail to do that. That's a task we need to do. Price stability in the United States is a good thing for the global economy over a long period of time. Price stability is the kind of thing that pays dividends for our economy for decades, hopefully. Even though it may be difficult to get it back, getting it back is something that provides value to the people we serve for the long run.
Not yet.
Thank you. The Fed has acknowledged in the past that that the tools that you have don't affect things like energy and food prices that stem from some of those conflicts overseas, and they're some of the biggest pain points for consumers. So as you pursue the current path that you've outlined,
Alistair,
is there a risk that
I was
some of those
$800
prices
down
simply
when
don't come
I
down?
came into this and started trading.
So we don't directly affect,
so I'm 3K down right
for
now.
the most part, food and energy prices, but the demand channel does affect them just at the margin. The thing about the United States is that we also have in many other jurisdictions, the principal problem really is energy. In the United States, we also have a demand issue. We've got an imbalance between demand and supply, which you see in many parts of the economy. So our tools are well suited to work on that problem, and that's what we're doing. You're right, though. We don't, the price of oil is set globally, and it's not something we can affect. I think by the actions that we take, though, we help keep, longer-term inflation expectations anchored and keep the public believing in 2% inflation by the things that we do, even in times when energy is part of the story of why inflation is high.
Hi, Chair Powell, Janelle Marti with Bloomberg. So the Fed is facing two more ethics-related incidents with the revision of the financial statements from President Bostic and President Bullard speaking at a closed event. So some senators, like Elizabeth Warren, are saying that this is a sign of greater ethics problems at the Fed. Could you talk about what this does to the public's trust in the bank and what the Fed is doing to prevent this kind of behavior from becoming common?
Sure. So you're right. The public's trust is really the Fed's and any central bank's most important asset. And anytime one of us, one of the policymakers, violates or falls short of those rules, we do risk undermining that trust. And we take that very
75 basis
seriously.
points. I mean, they're just waffling now. 75 basis points was expected.
At the beginning of our meeting yesterday,
if it had
actually,
been
we had a committee
50
discussion
basis
of the
points, the
full
market would have
committee
been,
on the importance of
rather
holding
big
ourselves
time. If it was
individually and collectively
100 basis
accountable for
points,
knowing
then
and following
anything over
the high standard
75,
that's
then
set
it
out in
would
our
have
existing
sold off
rules
big time.
with respect to both personal
So
investment activities and external
we kind of
communications.
expected. I think it was
And,
baked into
we've
the
taken a
market
number of
price.
steps,
So we're
and,
getting a little bit of shock.
I would just say
up
we
and
do
down during the
understand
conference
how
call.
important those issues
But
are.
it's pretty
I would say
much
that our new
we expect.
investment program that we have is up now and running, and actually it was through that the problems with President Bostic's disclosures were discovered when he filed his new disclosures. That's, we now have a central group here at the Board of Governors that looks into disclosures and follows them and approves people's disclosures, and also all of their trades. Any trade anyone has to make was covered has to be pre-approved. And there's a lag. It has to be pre-approved 45 days before it happens, so there's no ability to game market. So it's a really good system. It worked here. And I think we all said to each other yesterday morning, we recommitted to each other and to this institution to hold ourselves to the highest standards and avoid these problems.
Do you have an update on the investigations that are pending?
I don't. So, as you know, I referred the matter concerning President Bostic to the Inspector General. And once that happens, I don't discuss it with the Inspector General or with anybody. It's just the Inspector General has the ability to do investigations. We don't really have that. So that's what he's doing.
Michael McKee from Bloomberg Television and Radio. Earlier this year, you touted the 3-month bill yield out to 18 months as the yield curve with 100% explanatory power. And you said, quote, if it's inverted, that means the Fed's going to cut, which means the economy is weak. That curve is only 2 basis points away from inversion now. So I'm wondering why you are so confident that you have not over-tightened, particularly given that rates work with a lag.
Well,
Yeah.
so we do monitor the near-term
We can tell
forward spread,
jokes
you're
while
right.
we're at it.
And that's
Why
been our
not?
preferred measure. We think it, just empirically, it dominates.
Some people are enjoying
ones
the
that people
conference,
tend to
but
look at, which is 2s, 10s, and
Those
things like
people
that. So
probably
it's not inverted.
wear brown blazers.
And also, you have to look at why
With,
things,
with
why
leather patches on the
rate curve
elbows.
is doing what it's doing. It can be doing that because it expects cuts or because it expects inflation to come down. In this case, if you're in a situation where the markets are pricing in significant declines in inflation, that's going to affect the forward curve. So yes, we monitor it. You're right, and that's what I would say.
If I could follow up, you also said several meetings ago that the risk of doing too little outweighed the risk of doing too much. Is what you're trying to tell us today is that that risk assessment has changed a little bit?
Well, what's happened is time has passed and we've raised interest rates by 375 basis points. I would not change a word in that statement, though. I think until we get inflation down, you'll be hearing that from me. Again, if we over-tighten, and we don't want to, we want to get this exactly right, but if we over-tighten, then we have the ability with our tools, which are powerful, to, as we showed at the beginning of the pandemic episode, we can support economic activity strongly if that happens, if that's necessary. On the other hand, if you make the mistake in the other direction and you let this drag on, then it's a year or two down the road and you're realizing inflation behaving the way it can, you're realizing that you didn't actually get it, you have to go back in. By then, the risk really is that it has become entrenched in people's thinking, and the record is that the employment costs, the cost to the people that we don't want to hurt, they go up with the passage of time. That's really how I look at it. So that isn't going to change. What has changed, though, you're right, is we're farther along now, and I think as we're farther along, we're now focused on that. What's the level we need to get to.
It's not
rates.
what he's saying. It's
And,
how
I don't
he's
know what we'll
saying
do when
it.
we get there,
He's
by the
not
way.
instilling confidence into the market.
We'll have to see. There's
Patty.
been no decision or discussion.
That's the problem.
on exactly
I mean,
what
you look at
steps we
Trump.
take.
Half of what Trump
the
said
first
was
thing
absolute
is to
nonsense
find
or
your way
bullshit,
there.
but he said it with such confidence. The way that he delivers his message, he's not a good
Thank you,
public
Chris
speaker.
Rugaber,
He's
Associated
he's
Press.
boring.
Just to go back to
And
housing
when
for a
he
minute,
talks,
you
the market
mentioned the impact
tanks.
that rate increases have had on housing. Home sales are down 25% in the past year and so forth, but none of this is really showing up, as you know, in the government's inflation measures. And as we go forward, private real-time data is clearly showing these hits to housing. Are you going to need to put a greater weight on that in order to ascertain things like whether there's over-tightening going on? Or will you still focus as much on the more lagging government indicators?
So this is an interesting subject. So I start by saying, I guess, that the measure that's in the CPI and the PCE, it captures rents for all tenants, not just new leases. And that makes sense, actually, because for that reason, that conceptually, that's sort of the right target for monetary policy. And the same thing is true for owner's equivalent rent, which comes off of it's a reweighting of tenant rents. The private measures are of course good at picking up at the margin the new leases, and they tell you a couple things. One thing is I think right now, if you look at the pattern of that series of the new leases, it's very pro-cyclical. So rents went up much more than the CPI and PCE rents did, and now they're coming down faster. So the implication is that there are still, as non-new leases roll over and become and expire, right? There's still in the pipeline. There's still some significant rate increases coming. Okay, but at some point, once you get through that, the new leases are going to tell you that what they're telling you is there will come a point at which rent inflation will start to come down. But that point is well out from where we are now. So we're well aware of that, of course, and we look at it. And but I would say that in terms of what the right way to think about inflation really is to look at the measure that we do look at, but considering that we also know that at some point you'll see rents coming down.
Great. And just a quick follow. It looks like stock and bond markets are reacting positively to your announcement so far. Is that something you wanted to see? Is that a problem, or how much that might affect your future policy to see this positive reaction?
We're not targeting any one or two particular things. Our message should be, what I'm trying to do is make sure that our message is clear, which is that we think we have a ways to go. We have some ground to cover with interest rates.
But it is
before we get to that
Currently,
level
they're not in
of
recession.
interest
So
rates
who
that
do
we
you
think is
think would-
sufficiently restrictive. And putting that in the statement and identifying that as a goal is an important step. And that's meant to put that
Can
question
someone just
really as
look
the
up what
important
the
one now
definition
going
of a
forward.
recession actually is
I've also
in the
said
dictionary?
that we think that the
And
level
tell
of
me
rates
the
that
difference
we estimated
between
in September,
the U.S. economy
the incoming data
and
suggests that
reality.
that's actually going to be higher, and that's been the pattern. I mean, I would have little confidence that the forecast, if we made a forecast today, if we were doing an SEP today, the pattern has been that one after another, they go up, and, that'll end when it ends, but there's no sense that inflation is coming down. It just, if you look at I have a table of the last 12 months of 12-month readings, and there's really no pattern there. We're exactly where we were a year ago. So, okay. So I would also say it's premature to discuss pausing, and it's not something that we're thinking about. That's really not a conversation to be had now. We have a ways to go. And the last thing I'll say is that I would want people to understand our commitment to getting this done, and to not making the mistake of not doing enough, or the mistake of
That's the last thing
withdrawing.
he's saying. So we may as well get rid of that.
Our strong policy and doing that too soon. So I control those messages, and that's my job.
Edward Lawrence with Fox Business.
Well, you finished.
Mr. Chairman. So how
We'll
big of a
keep listening
headwind
to it, but
is
we'll
of
do
fiscal
some
spending
trading in the
to what the
meantime.
Federal Reserve is trying to do to
I've
get
been
inflation
trading
back
this
to
in the
2%?
meantime, and I've been up, I've been down, I've been up, I've been down. I went short, I
In
lost.
theory, it was a headwind this year.
Went
but I
short
do think
here,
you-
then
the broader
stop.
context is that you have households that have these significant amounts of savings and can keep spending, even in.
We'll see.
So,
We'll see
so
what
I think
happens.
those two things do tend to sort of counterbalance each other out. It appears consumer spending is still positive. It's at pretty modest growth levels. It's not shrinking, but people are, the banks that deal with retail customers, and many retailers will tell you that the consumers are still buying, and they're still they're fine. So I don't know how big the fiscal headwinds are, and they haven't shown up in the way that we thought they would in restraining spending. So it must have to do with the savings that people have.
What about the spending? There's tens of billions yet to be spent. I mean, from the Inflation Reduction Act, the American Rescue Plan, CHIPS Act, bipartisan infrastructure bill. How does that go and play into your thinking about the future?
It's demand is going to have some support from those savings, and also from the strong demand that's still in the labor market. We still see pretty significant demand and a tightening labor market in some respects, although I think overall I would say it's not really tightening or loosening. So we see those things, and what those things tell us is that our job is going to require some resolve and some patience over time. We're going to have to stick with this. That's just we take all that as a given, but we know what our objective is, and we know what our tools can do, and that's how we think about it.
Not sure which David Hunter you're talking about. Can you?
Hi, Chair Powell, Nancy Marshall again.
Plenty of them on Twitter.
I'm wondering, has the window for a soft landing narrowed? Do you still think it's possible?
Has it narrowed? Yes. Is it still possible? Yes. I think we've always said it was going to be difficult, but I think to the extent rates have to go higher and stay higher for longer, it becomes
Airbnb,
harder
is that
to,
still moving, is it?
To see the path, it's
No,
narrowed.
it's
I would
selling
say the
off.
path has narrowed over the course of the last year, really.
Quite a lot selling off right now.
Hard to say. Hard to say. Again, I would say that the sort of array of data in the labor market is highly unusual, and to many economists,
Tesla selling off.
there is a path to. There's a relationship
Bitcoin's
to
green. Well, cheers. Thanks for that,
GDP going
Tony.
down and
Don't trade
vacancies
Bitcoin.
declining, translating
news,
into unemployment. Or there's open
help my overall
all those things
portfolio.
are relationships that are in the data, and they're very real.
The whole
It is a little bit different
the whole
this time,
crypto
though, because
space
you
is
have this
buoyant at the moment.
tremendously high level of vacancies, and we think on a very steep part of the beverage curve. All I would say is that the
I don't know. I
job
think tomorrow
losses
we'll
may
probably
turn out
see.
to be less
Normally,
than
what
would
we
be
get to Mimi
indicated
after an
by
FOMC is
those
we get a bit of
traditional
chop the
measures
day
because,
after. We usually get either a
because
sell off
job
or a
openings are
rally
so
on the
low,
day, and then we get a bit of
because the
chop
labor
the day
market's so
after. But
strong.
tomorrow, I'm actually feeling a bit
Yeah,
positive.
again,
I
that's
think we
gonna be
might get
something we
a
discover
small
empirically.
rally tomorrow.
I think No one knows whether
Let's
there's
have a
going
look
to
at
be
the
a
SPY.
recession
So
or
you
not.
can have a look at the
And,
SPY.
if so, how
this is
bad
what
that
happened. This
recession
is
would
when
be.
Powell started talking
And,
here. And he
you know,
tanked
our job
it.
is to
Then-
restore price
then
stability
he
so that
started
we can
talking
have
again. Here, it
a
tanked
strong
it. And
labor
every
market
time
that
we've had
benefits all
a
over
bit.
time, and that's what we're
See
going to
this. Every time somebody else asks a
Why do you
question,
feel
we
like
get
the
some
window is
green. Then he answers, we get some red. Ask a question,
because we
green.
haven't seen
That's what
inflation
did
coming
happen. Now
down.
it's tanking now. So
The implication of inflation not coming down, and what we would expect by now to have seen is that as the supply side problems had resolved themselves, we would have expected goods inflation to come down by now, long since by now. And it really hasn't, although it has come down, but it's not to the extent we had hoped. At the same time, now you see services inflation, core services inflation moving up. And I just think that the inflation picture has become more and more challenging over the course of this year, without question. That means that
already
we have
red.
to have policy be more restrictive, and that narrows the path to a soft landing, I would say. Thanks very much.
yeah, I think we're done. Bye-bye, Powell. Oh my goodness. I want to. Does anybody else want a nap? I don't know about anybody else, but I feel like I want a nap now. I really want to take a nap. It has that effect on me, though. Always does. Well, I guess we may as well put our own music on. Well, we've got 45 minutes to get green. I've effectively, in that time, I was 3,000 down. I started off the night, the session 800 down. I went to 3,000. I've recovered most of it. So I've lost $1,000 net over the course of that FOMC conference. So yeah, he does make your skin crawl, doesn't he? I mean, he comes across a bit creepy. I'm not saying he is, I'm just saying he comes across a bit creepy. But maybe that's just me. Maybe I'm a little bit more sensitive to things like that. Right, let's have a look. What's moving? Let's have a look at the screeners, shall we? This is what I'm looking at. This is my Benzinga. Right now, my Benzinga's not telling me that there's a huge amount moving with any kind of real volume. So this is what, if you're wondering what I'm looking at on a daily basis to find stocks, this is what I'm looking at. This is the desktop that I'm looking at that tells me when stocks are moving. Particularly this bit right down here, the signals. When this starts moving, this is really helps me out. This is where I found BA earlier, and that's been my saving grace for today. But then again, I've just gone on bloody short on BA at $1,400, and that's now effectively the lost $1,400 going short on BA, and that's effectively how much down I am. So if I hadn't gone short, I'd probably be green by now. So, entertaining viewing, guys. I mean, what are you going to do? What's going on here? There we go. That'll do. Took me a while to work that one out, but we'll see. Make it green. Let's see. A bit of a sell-off right now. BA selling off. Tell me about it. Okay, I'm a little bit disappointed at the 1700. I was 800. I've lost $900 in that during that conference. Well, actually, probably lost more because you get the transaction fees in that as well. So I've lost over $1,000 in that conference. Benzinga's fantastic cash flow. Benzinga really is. So I mean, if you want to, I'm not saying that you should, but if you're not using Benzinga, what the hell are you doing? You know? Benzinga really is great. Now I'm looking for something to trade. Short, long, up, down. Yeah, are you looking juicy for a short? Because you were earlier. Not feeling comfortable shorting you right now, but not with that pattern. Just above the VWAP. If it breaks low, if it breaks 150, I'll go short. Okay? I'll go short on Boeing if it breaks 150. It was very close. We could lose our shirt on this, but hey, look, I'm on the wine. I'm happy. We were 13,000 down, so we're like 1,700 down now. So, look, if we can get even back to 800 down, I'll be happy right now. If we can recover $900 on this, I'll be very happy. If we can recover $1,400, even better. And get green going short on Boeing. I'll be amazed. SPY is still selling off. There's not a huge amount of volatility considering its power hour. Expected a little bit more volume and volatility. I mean, I'll tell you what I'll do, cash flow. Give me 10 minutes, give me 10-15 minutes, and I'll go over the Benzinga and how I set it up. I'll do a bit of a Benzinga tutorial and how I set it up. What I've got on my Benzinga scanners and etc. etc. So give me 15 minutes. Hit the thumbs up button if you haven't already, and I'll show you how I do my Benzinga and what I get out of Benzinga. I'll give you a quick tour around Benzinga. To break the VWAP, I'm doubling down. Well, I'm saying I'm doubling down. I can't double down. I've not got enough buying power. But if we break the VWAP, I'll add to the position. $1,300 unrealized. 1,700 is our deficit right now. VWAP is 149.24. 149.20, and I'll add to the, I'll take some more. I could take this right now and No, I'm just not going to double down. I'm just gonna take some off right now. Oh, I did double down. That's a bit silly of me. It's okay. I've locked some gains in instead. Locked some gains in. We're only 1,200 down now on the day. 1,600 unrealized. You've just watched me short Boeing to a green, red to green right now. So I'm just gonna cover another large portion of that. We're 600 down at the moment. We've still got you all watched me earlier, got 13,000 in the red. You've just watched me recover it. And if you didn't watch the 12,000 Boeing trade, stick around, go to YouTube. I'll be dropping that trade as a, I'll be dropping it on TikTok once I've edited it, because I can't drop a video longer than 10 minutes. It's a 16-minute trade. So I will finish up. I'll do a summary video on this shortly. $392. Not quite green yet. Said you're watching me. I've got 1,000 shares in this right now to the short side. I'm shorting 1,000 shares right now. Like this to break 149 and then capitulate. It was down at 147 when I started trading it earlier today. 146, I think it was. 145 actually. When did I first get into BA? That's a good question. 145.63. That's when I got in. Okay, well, I'm just going to set a stop now. What did I get out of the last? That would have. Set a stop. On 149. 149, that's where I'll set my stop. Okay. There you go. I'll set my stop at 149. That should cover me. But if it drops below 148, even better. 148.50. I'll put a trailing stop on there shortly. Well, you look, just nip into my link tree. You'll see you can donate there. Don't worry. You've got my PayPal details in my link tree. So send whatever you want. I think we're good though. I think we're good. We should be okay. It's coming up. It might stop me out here. 193, 93, 48, 93, 95. I'm at 49. So should stop me out at 49. There we go. So hey, look, guys, it's a green day. Every green day is a good day. We're $120 green, but look, it's a green day. It's a win as far as I'm concerned. So look, we're green short, we're green long, we're Boeing saved our skin today. We were $13,000 down after the first session. We traded quick check, and we traded how's he pronounce it? Arcturus. And between the two of those, we were at 13,000 down. Yes, we traded Sonoma for a little bit as well, but we've managed to recover our deficit. So look, hey, we're green on the week. We're still good, green to a decent amount on the week. We're over 10 grand green on the week. So Hey, look, every green day is a good day, no matter how small. You get to keep your $600, your £600. Look, Alfred, you're welcome to send it over no matter what. Look, it's fun. It's all fun and games. See, this is what I would say to you, is if you don't enjoy the markets, if you don't enjoy trading, don't do it. Because whilst financially it can be rewarding, that's not enough. You've got to enjoy it. If you don't enjoy the challenge, it's not worth getting involved, guys. It really isn't. It can be extremely stressful. It can be extremely stressful. So you've got to enjoy the challenge. And today, I've thoroughly enjoyed the challenge. I've not made any money. I've not made any money today, but I've thoroughly enjoyed the challenge. I'm probably about, let me look. According to this, according to Dash Trader, I'm a little over $500 down in the red net. But look, like I said, it's one of those things. You've got to enjoy it. It's like any job. If you're going to have a career, don't just do it for the money. You've got to go to McDonald's. If you want a job that's just going to pay you and you're not going to put your heart into it, go and get a job at McDonald's or pushing trolleys around Tesco's or Walmart or whatever. It's got to be a labour of love, and if it's a labour of love, it's worth it. The financial rewards can be phenomenal. They can also be pitiful. So again, I stress the majority of people that get involved in day trading lose money. They lose money long term. They're never profitable. If you're just talking about the stock market, 85% of people quit day trading after 2 years, within 2 years, because they've never been profitable. If you extend that over all instruments, we're talking futures, commodities, forex, crypto. If you extend it over all instruments, and we're talking about day trading, then over 95% of people lose money long term. They're never profitable. So just bear that in mind. If you're thinking of getting involved in day trading, don't do it without educating yourself first. I did a video on YouTube. Someone thought I was attacking the guy, and it wasn't. It's like people like me make it look easy. But I've got a mate that's a bricklayer. He's a brickie. Well, he's a builder, but he's a qualified brickie, and he makes building walls look like a piece of piss. And I've tried building a wall, and mine looks like a donkey's dick. And I'm telling you, it's not easy. And day trading is not easy. The more you practice, the better you'll get at it. So practice in a simulator first, okay? If you're going to do it, practice in a simulator. There's absolutely no point trying to put money into a real account if you can't be profitable in a simulator first. There's no emotion. You will not get the emotional rush that you get from day trading in a simulator. It's a bit like playing COD on the PlayStation versus joining up the military and getting sent to Afghanistan. I mean, come on. You're not going to be... the guys in the Ukraine are going to have much more adrenaline on the line than you playing COD on your living room. So, come on. Think about it that way. If you've not got money on the line, there's no emotions involved. So it allows you to practice and exercise that muscle memory of being disciplined around your strategy, cutting trades when you're supposed to cut them, managing your risk versus reward, all that kind of stuff. And if you do that in a simulator, you're able to do that in a simulator, yes, you'll find it's more difficult when you put real money on the line. But if you start small by utilizing the same principles you had in a simulator, then you can be profitable. If you go straight into putting money into a broker, you're going to lose your money. If you want to put I'll tell you what I'll do. Anybody there that wants to learn how to day trade and is thinking of putting money in a broker, if you want to put five grand in a broker, give it to me. I'll teach you how to day trade. I'll give you a simulator for 6 months. And if you can be profitable in that simulator, I'll give you half of that back and you can prove that you can be profitable. How's that? It's a deal worth anything. I'll teach you how to day trade. I will personally mentor you for 2.5K. You give me 5K, I'll give you 2.5 back once you prove that you can be profitable in a simulator. And if you can do it within 6 months, if you can do it within 2 months, I'll give you the whole amount back. How's that? When will the bull market start? So we started the bear market in January, and the average bear market since the 1920s lasts for 15 months. So think about that. We're talking Easter next year. So if it's just an average bear market, we're talking Easter next year. But we've just come off the longest bull run in history. So we might have the longest bear market in history. I don't think we will. I think the early part of next year we'll start seeing a turnaround. We've already started to see a bit of a turnaround. We're way off the bottoms that we had in beginning of last month. But I think from a bull market back to the times of the last couple of years, it's going to be a long while before we get there. But I think the bear market will probably see the end of that in the early part of next year. That's my own opinion. It's not financial advice. Anyway, as you can tell, I've been drinking the wine and I'm going to go and get another top up. Trading wine, it shouldn't work, but it does. Actually, that last statement, strike it from the record, it actually doesn't. It reduces the fear. It reduces the fear. So the fear of loss. If you've got a little bit of alcohol in you, it's the same thing. So if you're driving, you're less likely to be worried of crashing. So you're more likely to crash. So the same thing with trading. You're less likely to worry about losing money, so you're more likely to lose money if you do it while drinking alcohol. Why would I do that, Ian? There's no reason why I would put the Mighty Blues on. But why you call them the Mighty Blues, I don't know. I mean, you call them the Greasy Blues or the Oily Blues or something like that. But Mighty, no, not so much. A masterclass, I give over. Like, I could put a football team together. Give me 10 billion euros, and I'll put you the best football team together ever. Because that's essentially what Man City have done. Now, how much have they spent since the oligarchs took over in 2009, 2010, whatever it was? I remember, who's that comedian? I don't remember which comedian. There was a comedian, he was talking about, he's an avid Man City supporter. And they just got took over, and they bought Rubino on the last day of the transfer window. You probably remember it, Ian. They bought Rubino, and it came with a big hype. But he was talking about, he was watching Babe Station, so he was giving it, a bit of the old Thomas the Tank. And he was watching Babe Station. His missus walked in on him, and he switched it over quick, and we switched it over onto Sky News when it was the end of the transfer window, and she saw he had his knob out and he was playing with himself, and she said, "What are you doing?" And it was Sky News, not Babe Station. And he said, "We've just signed Rubino." So she walked out. It was like, couldn't argue with it. I've not quite reached that. I've not quite reached that straight. That's not your boy. Sounds like I'm drunk when I'm trying to pronounce your name. I've not quite reached that stage yet. I don't know. He's not doing too badly in Italy. But hey, look, what are you going to do? I'm green and I'm going to stay green fuzzy. It's only taken me all day. Look, I've got the trade ready to go for my trade recap after we finish. We've got 20 minutes left. If I see something moving, I might see if I can get literally green. So I'm a little over 500 down at the moment. Net, I'm green. Statistically, I'm green. I'm a little over 500 down at the moment, but hey, look, I don't think BA's finished. The market hasn't finished, so BA started following the market. Well, I'm green. Yeah, absolutely, superpower workout. If you want to send me an email, just go into my link tree. My email address is there. There's a little icon there that'll take you to my email. So you can send me an email directly straight to me. I answer all emails. Actually, I've got one email that I've been meaning to answer, but I need to spend a bit of time with it because it's quite a long-winded one. So if you're watching, it's one of the guys from the Day Trade with Tony course. And if you're watching right now, I will get to your email. I've not ignored it. I've just not. It's quite. You've given me quite a lot to respond to. So a lot of bullet points. So I need to take a bit of time to get through that. So bear with me. I'll probably have that to you by the end of today. Yeah, Mourinho at Chelsea won things. Mourinho at United won things. Mourinho at Chelsea and Mourinho at United, Ian, was the same Mourinho. It was the same team. It was the same tactics. It was boring to watch, but it was effective. And United didn't like it. And what's happened since? They've done absolutely jack shit since. So they sacked Mourinho. Thank you, Klopp. They sacked Mourinho and replaced him with Ole Gunnar, school teacher. And he was beyond useless. They sacked Ole Gunnar, school teacher, replaced him with the next best thing, and they got rid of him and got Eric 10 pints. So we'll see. Oh, right, okay, Fuzzy, it's 75 base points, essentially. 75 base points. The Powell was saying a load of nonsense that nobody believed because he doesn't say it with confidence. See, this is the, as a public speaker myself, in case you hadn't guessed, I have done public speaking and done quite a lot of it. My previous role, before I started trading, before the whole COVID took over and everybody went into lockdown, I was regional vice president of a software company, and as part of that I did a lot of public speaking, so presentations and meetings and all this kind of carry on. And one of the big things that you learn, if you ever do a TED Talk, if you've never done a TED Talk, do one. It really does help you train. It's great for building your confidence, but it helps you train for public speaking. But the number one rule of public speaking is believe what you're saying. If you don't believe it, no one else will. So you've got to believe what you're saying. So you've got to speak with confidence. And if you don't speak with confidence, nobody's going to believe what you believe, what you're actually telling them. So the Fed rolling Powell out every time they do. I mean, the guy he's a sleeping tablet on legs. But they roll him out and somebody asks him a question and he starts stuttering and stalling, and people just don't believe a word he's saying because he doesn't believe it himself. It comes across, I'm sure the guy's extremely intelligent and extremely competent, but it comes across as the exact opposite because of his lack of confidence. The guy he lacks charisma, which if you're in a public role, charisma accounts for so much. You can look at Elon Musk, right? The guy he's a space cadet in more ways than one, but he oozes charisma. I mean, let's face it, he had a threesome with Amber Heard and Cara Delevingne. Any guy that has a threesome with Amber Heard and Cara Delevingne, I don't care whether she was married to Johnny Depp or not at the time, but any guy that can have a threesome with Amber Heard and Cara Delevingne has to have more than just millions and the billions in the bank. You've got to have charisma, and Musk has charisma. I don't believe in his politics. Sometimes I think the guy's a moron, but yes, there's a fine line between genius and insanity, and he walks it very well. And the guy oozes charisma. It's as simple as that. Whereas you look at someone like Powell, and the guy's had a charisma bypass. What are you supposed to do with that? You know? Going back to the football debate, Jose Mourinho. oozes charisma. The guy is like the dictionary definition of charismatic. And that's why the press loved him. I mean, he isn't a genius. Anyone can win the Premier League or the European Cup if they've got enough money to spend. I will reduce that volume on the music because I just realised I turned it up for Powell's speech and I didn't turn it back down again. But anyway, that's just me ranting. What else is moving? Nothing. Ah, come on. We've got 15 minutes. Give me something to actually make a little bit of money today. Into the close. Here we go. So cassava started moving up. Cassava science, and I'm seeing it on the beta scanner. It's not on the 15-minute scanner, but I'm seeing it on the beta scanner. Go figure. It's not huge volume, but it would have been nice to have been able to get in around 35.50, 35.75 maybe. This doji here is a nice little pullback. 36.66. So we're looking for 36.66 on the 1 minute. So 36.70. Yeah, he's not humble, but then again, there's one thing. One of the things that held me back in my career, and I had this thrown at me a couple of times with people who managed me directly. They thought I was cocky. That's the word that they. And Marino is the epitome of cockiness. So they thought I was cocky, and I wasn't so much cocky. I was confident. Cocky is when you believe you believe you're better than you are. But I always backed up my results with numbers. So as a regional vice president, as a sales director, as a sales manager, whatever it was, as a salesperson, yes, I was confident, and yes, that confidence came across. But I backed it up with numbers. So I was never humble. I'd blow my own trumpet, absolutely, because if you don't, who else will? So yeah, he was at one stage. He started off at Barcelona as in the backroom staff, and he was Bobby Robson's translator. Absolutely. I'm okay, Super Chip. So we were 13,000. I don't know if we were on the earlier stream, but we're 13,000 down earlier. We're finishing green on the day. So that's the 8th green day in a row. We'll keep our green streak going. So I'll be able to, we managed to make nearly $13,000 on Boeing. Well, over $13,000 on Boeing when you put the short and long together. So over $13,000 on Boeing, which, you know, you make your own luck in this world, Arminio. I don't believe in luck in any way, shape or form. You've got to put yourself in a position to be the receiver of luck. You could be a poker player. People say poker is a game of luck, but if you don't know how to play poker and play it well, you can get the luckiest cards and someone's going to outplay it. So luck is only partial. Yes, luck always plays an element in life, and you know, you've got to be in the right place at the right time to take advantage of the right opportunities, etc., etc. But Marino is not lucky. He's been successful wherever he's been. He was successful. He won the European Cup at Porto. He won the titles and trophies at Chelsea. He won trophies at Bayern. He won trophies at Madrid. He won trophies at United. Marino, wherever he's been, he's won stuff. So you can't. His track record is so prolific, you can't say that's down to luck. You know, it's not just that he's a translator. Yes, the fact that he speaks multiple languages will help him on the training pitch simply because of the cosmopolitan nature of the average good football team. But no, it's not luck. It might have been luck that he got the chance from Bobby Robson. That's great, but it's not luck that he's successful where he is, because Mourinho would have been successful even without the chance from Bobby Robson. It would have just panned out a different way. He didn't win nothing at Tottenham, but was he given a chance at Tottenham? Come on. Well, how long did he stay there for? What, 18 months? Come on. Nobody's been successful at Tottenham. When was the last time Tottenham won a trophy? Come on. Let's see, is he at Roma? Yeah, well, people said exactly the same thing about Pep Guardiola, Arminio. You know, wherever Pep has been, he's been back with the best players and a huge budget behind him. So, what's the difference between Mourinho and... I mean, I've got to say, I'm not particularly a Mourinho fan, because I'm a Liverpool fan, and he managed two of Liverpool's big rivals in Chelsea and United. So, but you can't argue with his results. So, but Guardiola's on top because of money. I mean, he took over a very successful Barcelona side with Ronaldinho there, the golden generation of Barcelona with Messi, Xavi, Iniesta, Silva. I mean, how many... Villa, PK. Then you're laughing, Alfred, that he didn't win anything at Tottenham, and you're happy. So Sava pulling back. So site absorbance moved this morning. It's now back over $2 for the first time in the open session. Breaking highs. There's nothing wrong with supporting Arsenal. Arsenal are okay. I would rather Arsenal win the title this year than City. That's all I'm saying. But I'd rather neither of them win it. I'd rather Liverpool make a comeback and win every game between now and the end of the season and finish with, what, 94 points. Is that going to happen? Probably not. Is it possible? Yeah, it's possible. Just not highly unlikely. But if you're over 90 points, unless you're Liverpool, if you're over 95 points in a Premier League season, you will win the league unless you are Liverpool. The only team not to have won the league with more than 95 points is Liverpool. On 2 occasions. No, 3 occasions. And City beat them to it on both times. Oh, 3 times. Yeah, he's still making mistakes. Look at what he did against Liverpool 2 weeks ago. Nobody's perfect. I'm not going to stick around for earnings. There's no big earnings dropping tonight, I don't think. Is there any... Dave, let me know. Is there any big earnings to stick around for? I was hoping that I might catch something, take me green on the day before I did my trade recap. Well, I am green, but I mean net green. I'm about 500, actually. I'm about 500 down at the moment. eBay, okay. Yeah, I'll stick around for 15 minutes. Let's see what's. Let me just pull up the calendar. New window. Let's have a look here. Let's have a look here. Okay, so what have we got after the market closes? Mistress, Vaportherm, no. Rocky, Bristow, Hamilton, no. No, not interested, not interested. Lumina. Aside from eBay, Qualys, Israeli company, security company, used to sell their products. Actually quite good. Covey, sales company, Franklin Covey, good sales courses actually. Education, Forrester, always use their research. Yeah, I'm just not seeing anything really other than eBay that's whetting my appetite here. In terms of sticking around, been a long old day already. Fastly, maybe. We'll see. Chesapeake, former customer. Ingersoll around. Etsy. Etsy could be interesting. Roku. Etsy, Roku, HubSpot, eBay. I'll tell you what I'll do. I'll give it 15, 20 minutes. Oh, Robinhood. There you go. Expect to see Robinhood sell off. That'd be nice. Yeah, I might stick around. Maybe take a trade after hours. See if I can't get green on the day. Those have all dropped already. So let's see what's going on here. eBay, Etsy, Robinhood, absolutely. Yeah, John Morris, Coinbase. You can't day trade on Coinbase. You need a better platform than Coinbase. It's shocking. If you're going to be day trading, you want a day trading platform that does crypto. If you're going to be doing crypto, as it were. Oh, stop. I mean, Pebble's drivel was horrible. That's 2 months in a row I've streamed that. And to be fair, I don't think I'll be doing it next month because, oh God, I'm that close to taking my belt off and stringing myself up by the time he's halfway through his address. The guy's depressing. He really is. Right, let's turn the scanners over to after hours and see if anything moves. That's regular session, so let's go to after hours. Let's turn the scanners on. What's good? Oh, well, so this isn't a crypto channel, John. Yes, I'm happy to talk about crypto, but this isn't a crypto channel. This is stocks and shares. So this is equities. Yeah, so we're trading equities. So the stock market, the US stock market specifically. And today was interesting because I was $13,000 down. Not long after the market opened this morning, and now I'm green on the day. So I'm just waiting for something to present itself after hours and see what happens. Looking for any kind of volatility. I'm going to stick around. I'm going to give it an extra 15, because it's only 8 o'clock. Normally, because the US hasn't caught up with the rest of the world in terms of daylight savings time, that they go, they put the clocks back next week. So we've got an hour ahead, if you will. So normally I'm doing this at 9 o'clock, and I start recording my trade recap and stuff for the day. I've already started doing that for the British Boeing trade I took earlier, and I'll be dropping my day trade recap on YouTube shortly after this stream. So if you've not subscribed to my YouTube channel, jump across and subscribe to my YouTube channel. If you're watching on YouTube right now, hit the thumbs up button, hit the subscribe button, hit the notification bell. You'll get notified when I drop that video a little bit later, and you can watch it to your little heart's content. So yeah, let's have a look. Roku seems to be the one that's motoring. Want to get some volatility, you got to be willing to take some risks. Oh, got in at 55. Roku. Are you selling off? Are you? Where have you gone? Roku. No, 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 Roku. You don't want to be going that direction. Why did I buy 2,500 shares of Roku at $55? I've just lost $5 a share. That's 15K. Oh, this is a classic case of don't drink and trade. I'm a bottle of wine down. There you go. I've just lost 15 grand. I've just lost 18 grand by trading drunk. I just lost $18,000 on Roku trading drunk. It will end in. Hey, look, I'll wake up tomorrow and I'll have a hangover from this tomorrow. But in 30 seconds, Fuzzy, absolutely. I'm glad I can laugh about it now, because if I was sober, I would not be laughing. Oh, nice. Sunrun. That's a good beat all round, is this? I'm gonna have to see if I can make some of this back, because 80, I can't look. I was green on the day. I was 13,000 down, and I've just made a stupid drunken trade. Oh, don't trade while you're drunk. I should up cash flow. I'll get it back, don't worry. I'm a little bit disappointed in myself for not locking my montage. I should have locked my montage before I even started here. But look, have I got any more wine left? Just finished it. Yeah. I don't want to open another bottle. I know it's 8 o'clock. That's sad. I'm opening another bottle. I'll open another bottle. Why not? The dog's trying to kill me here. May as well have fun while we're here. Okay, there we go. Why not? It's cost me 18 grand already. Peloton. 7.5k, no, I did 9k a bottle, John. 9,000 a bottle. I'm 18k down, not 15. Well, funny enough, Fuzzy, that's what happened with Meta. It went the other way with Meta. So I got in and it mooned up, I got in and it went down. So, look. $28k last week. I've just lost 18 of that. So, hey, look. What were we? We were about 10, what? About 11k up on the month. We've just lost 18, so Etsy. Let's see. There's a 40-cent spread on Etsy. Let's see if we can't make a little bit back. Will Etsy get over $100, do you think? Do we think Etsy will get over $100? Can Etsy get over $100? That's the question. If Etsy gets over $100 here, I'll be... Right, so 96 bucks is where I'm putting my stock. I've got to stop at 96. Why? Oh, fuck, it's 8 hours. See, that's what happens when you trade drink and you forget you can't put stops in place 8 hours. I'm not. Hey, Dad, I'm having fun. Started today with 111,000 in my account. I'm up overall. I'm having a good month. I'm having a good year. Well, I'm having a good month. I say I was having a good month. It's November. It's like the 2nd of November. I can't say I'm having a good month. I'm actually down on the month as a result of that. But I'm having a good year. I'm ahead. Or I was, I'm ahead of, I'm already made more money this year than I did the whole of last year, and with 2 months to go. So just put that into perspective. I'm like 2 months ahead of where I was last year. So I'm trading better than I did last year, and that's a good thing. Come on, Etsy, turn it around. I've got 5,000 shares here, and you're 86 cents a share away. You absolutely can, Tamimi. Absolutely can. But I'm not too worried about it going down to 90. This is why I like to trade stocks. as opposed to options, why I prefer to trade stocks as opposed to options. You trade options and it doesn't go your way, you can lose everything. You trade stocks, you still got something in the tank. You know, it's not good. Very rarely is it going to go to zero. So if Etsy goes to it's 95, it can go to 92. You know what? It's not going to go to zero. I'll buy in at 96. It's not going to go to zero. I know I was 6K up on Etsy just briefly. I didn't pull the trigger though, Fuzzy. That's what happens when you're trading drunk. But that's okay. I'm looking at the daily on Etsy, and we've got quite a way. I mean, it was up at just earlier towards the end of last month, it was up at over $100. The daily, it's been selling off quite a bit. So good earnings. It's just had good earnings. So let's see. I'm just going to give it a little bit of wiggle room to see if it comes back and gets over 100. What did I start at the beginning of what, John? The beginning of my career or the beginning of the day? I didn't exactly smash October though, cash flow. I was 10% off goal. So whilst I can't complain, 90k profit in October is a phenomenal month. I have to say that because I don't want to sound like, going back to what I was saying earlier, cocky. I've set myself a goal of 100,000 a month. So I've got a target I need to hit every month. And I didn't hit it in October. I was 10% off. I absolutely crashed. I had a car crash in May. But I made that up because in June, July and August, I was, 160k plus every month in June, July and August. I took half of September off and still had over 50k as well in September. So that September wasn't too bad either. So I was disappointed in October. And October is usually a good month of trading. The markets are usually fairly volatile enough to make good money. So I was disappointed the fact that I only made 90k. I wanted to be over, not just 100. I want to be over goal on October. But look, we came into October ahead on the year. Started my journey, started with zero. No, what actually happened is I got a healthy redundancy package, a healthy severance package from the company that I used to work for. And I put, it was 12k in originally. That was my first position. Well, 12k in, that wasn't the redundancy package. I put 12k in. And I lost that within, I think, 3 weeks. It was less than a month. About 3 weeks I'd lost that. I blew up the account. And I then replaced it with another 10k. And I blew that up. And then I put a 5k account in, a 5k in there. I blew that up, put 5k in again, and that's the account that I started to make money on. I lost, I did lose some of that. I gained, lost. I was kind of trading water. I was down to about 2,500 at one stage on that account, and then slowly and surely built it up, and then consistently started to make small gains, and then over the course of time was able to steadily increase that. Once I turned the corner, I realized that it's not about the profits you can make, it's about the equity you protect. And occasionally you'll have a good day and you'll grow your account. Every day you're trading, if you have a break-even day, it's a good day. And then if all your days are break-even, and then once a week you have a good day that you like 5x your target, of course you're going to be happy. That's a profitable trader. you know, one profitable day per week. If you break even 4 days and you're profitable 1 day, you're having you're a profitable trader long term. And it took me a while to kind of get into that mindset. I don't like this. I don't like this at all. $6,000 down, and we've got a descending wedge into a flat bottom, which is on low volume after hours. I'm stupid for getting into this, but hey, what am I going to do? $95.86 is my entry. $94.80 is where the bid is. Shit, I just realized that there's like 60-cent spreads. Yeah, probably. No, I should wait. If I get profitable on Etsy, I'll just get out. I just it's not looking overly appetizing to me right now. What did I move? What did I change? The chart on the right. John, you can only, I've only got one chart up there, buddy. I'm not sure what you mean, the chart on the right. This is all one chart. What you're looking at is Etsy during the open market. What you're looking at with the grey background, this is Etsy in the after hours market. So this is the open market. This is the after hours market. It's the same chart. It's the one chart. The grid with the writing and the numbers, that's the in the middle. So you've got my face, and to my right you've got my P&L for the day, which is currently 18,000 down. I'm not looking forward to doing my trade recap on that after being working hard all day to get from 13,000 down to getting green on the day, and then taking a stupid drunken trade. Well, it's a lesson learned, I guess. Well, a lesson for someone else to learn. I'm not going to learn it. I'm going to do exactly the same again in another day. That's what I do. Idiot. eBay, 5% up. Let's have a quick look at eBay. eBay. Yeah, that's not going anywhere. I'll get green, I'll get out. $96. I'm caught between the spreads right now, so the bid and the ask is either side of my average cost. So I'm caught between the spreads. There we go. There we go. Are we going up? Are we going up to $97? That's what you wanted to go up to $97. Come on. Here we go. Here we go. Maybe patience is a virtue. All right, let's get out. Patience is a virtue. Absolutely, patience is a virtue. Get half of that off. I never cut it too soon. I've just taken some profit. Give it some room. And now I can move I was going to say I could put a stop in place for break even, but I can't because it's the after hours and I'm drunk, so that's not going to work. This goes to over $100 though. It'd be nice. Let's go. Let's go. So that's 6K. Lock in some of the gains there. 99. Let's get over 100. Come on, you know you want to. Wouldn't it be great if he ended up green on the day with Etsy? That would just be amazing, wouldn't it? Well, I'm looking at this, the previous high I've got is like 210, 220 from January. It's not going up to 220, granted. I mean, I'll be holding all the way up to 220 if it did, but Christ, that's not going up to 220. Come on, 110. Let's see if we can get 110. Let's get 100 first, and then we'll talk about 110. Happy days if we get to 100. I'll be happy with a 10k loss today. After that stupid trade. After that stupid trade. Come on, Etsy. 98 and I'm out. You're going the wrong direction now, Etsy. I told you needed to go upwards, not downwards. Come on. Sort your life out. Come on. Market makers. $100 is what I said, not 98, not 98.2, not 98.4, not 97. $100 is what I asked for. Come on, do as you're told. 99 on the ask. 99.46. Oh shit, look at this. I've got like spreads are so rangy. Spreads were like 60 cents then. 99 on the ask. Only $1 more to go. Come on. Come on, everybody. You've got to. This is like the cop at Anfield. You've got to suck it up and shout for Etsy to get to $100. You've got to sing the songs. You know. Which is profit? Realized. Realized is the profit. Unrealized is where I am on the position. But I've not locked it in. So realized is what I've locked in. Unrealized is just potential. And I'm thinking that this potential is not realizing. It's unrealized potential. This is fun. I'm enjoying it. I'm losing money, but I'm enjoying it. If I can get, what? I need 3,500. I've got 3,500. I should lock that in. I really should lock that in and be under 10k as a 10k loss. I really should. But I want 100. I want 100 on Etsy. I want Etsy to reach 100. Fuck off. Fuck off. With your huge swing to the downside. That's what happens with well, I'll get demonetized for saying that, that's for sure, on YouTube. Oh, drunken trading on YouTube. Oh, I'm definitely going to get demonetized. Oh, who's having fun? Let me know in the chat. Are you having fun? Are you not entertained? To quote a guy I actually met him once on an Emirates flight from London to Dubai. He was on his way back to Oz, and I was on my way to Thailand. Russell Crowe, good guy. We got talking. He was I was flying business class, and we were in the bar, because if you ever fly Emirates, you're in business class. There's a bar It's literally a bar. And I got up and I was at the bar, and he came up and he walked to the bar, and we just got talking and drinking beers and whatnot. Me and Russell Crowe, that's my claim. One of my many claims to fame. And I used to play rugby league, and he owns half of a rugby league club in Sydney. So I've still got 500 shares in this, but I will get out if it keeps falling. But yeah, we just got talking. He's a really nice guy, actually. I mean, he's got a lot of bad press and stuff, and there's a bit of a diva, but nice guy, Russell Crowe. I'll look for something else. I'm not done yet. I'm having fun. Who's having fun? Let me know, guys. Who's having fun? Armenia, we don't like the KKK. No, we don't mention the KKK. The only time we mention the KKK is when we're defeating them in various guises. Right, what else can we trade? EXG. Shut up, stop warning me. Like I'm going to pay heed to any warnings when I've had a bottle and a half of wine. That's no volume. Is it me, or is the screen blurred? It's probably not a good idea to trade when the screen's blurred, is it? Really? Oh, if I could have got in there at 22, I'd have been happy. I was never down 24k, Tamimi. Come on. Let's be real. I was only ever down 18k. Now I'm down 15. I've made 3k back. That's not good enough. I need at least another 5k. I'm looking at Roku. I'm looking at Run. Run's not doing anything. Roku. Stop. Roku. If Roku makes it all the way back up to 57, I'm going to be a very unhappy boy. That sell-off crucified me. I figured, yeah, great, this is going to be good, and it went all the way up to 62, and I didn't take profit. Typical. I got in at 55, went up to 62. If I cut there, I would have made about 15 grand, and it sold off. And I ended up getting out for like 48 or whatever. Ah, stop, Tamimi. Come on, let's have some fun. It's only money. It's only money. You're right, but it's only money. All right, Tamimi says I should switch it off. Tamimi reckons that I'm being an idiot, and she's right. He's right. He, whatever. Tamimi reckons I'm being an idiot for looking for additional things to trade after hours instead of going watching the football. I'm going to put it out to you guys in the stream to let me know. Should I lock it down now, or should I continue trading? I'm rather drunk. Car crash waiting to happen. I'm already 15k down after being 13k down. So I've just lost all the gains I made on Boeing, and let me know. Should I carry on trading? Are you having fun? Let me know. If you're having fun, we'll keep going for another half an hour. When the fun stops, stop. Exactly. Swifty, he's my guy. Swifty's my guy. When the fun stops, stop. I'm having fun. If you're having fun, then let's carry on having fun. If the fun stop, then there we go. If I'm back down to 18k, then slap my wrists. But I've made 3k back. Let's see if I can't make another. I should never have taken that trade in the first place with Roku, but hey, look what you're going to do. Etsy selling off. Yeah, that's fair enough. I should have taken profit up at the top. I did take profit up at the top, but I should have got out up at the top. First candle to make a new low, $98. I should have... My own bloody rules, my own bloody strategy, and I'm not adhering to it. First red candle makes a new low, exit. Here, $98. Candle makes a new low. And I didn't exit. There you go. I'm not going to open the first bottle. I've not finished the second bottle, so I'm not going to open the first bottle. I'll reduce my share size. Okay, Tamimi, I'll compromise with you. I'll reduce my share size. Fair enough. I'll not go in big. I only went in, you know, that kind of share size with Roku because I thought, okay. And to be fair, it was the right trade. I mean, let's go back to Roku. It was the right trade. I just didn't execute. So I got in here, and it moved up and went up to $62. I got in. What was that? I'll tell you exactly what it was. I got in at $55. $54.92 is when I got executed at. So $55, and it went up to 62. If I just cut at 62 instead of holding, I'd have made $7 a share. And I had 2,500 shares. I mean, think about that. That's like, what's that? 14. That's like 17 grand. Didn't. Etsy double bottom. No. That's not a double bottom. More like a head and shoulders. Shoulder one, head, and we're in the process of shoulder two before the sell-off. I don't normally like trading after hours, but I'm enjoying your company, guys, and I've got a glass of wine, and you know what? Fuck it. Well, I'm good. No, there's not. It's not. I could make it back, yo. I'm definitely going to make it back. I've made a mistake by trading drunk, and look, if nothing else, guys, this tonight is a lesson for everybody that's watched this stream. Is do not day trade or evening trade or night trade or night trade. Animal night trade. Isn't that a Blur song? Animal night trade. Anyway. Do not day trade whilst drinking wine. It's not good for your bank balance. Well, we've got 2 more days left. Thursday, Friday. This day next week, I'll have recovered that. It's a 15k drawdown. I'll be over that in this time next week. No, it's not my glasses. I'm drunk. That's why the screen's blurred. It's not my glasses needed cleaning. I really need to... Is City losing? Against the Farmers' side as well. Oh, fair play to you, Tamimi, keeping me updated on something that I'm not really that interested in. I couldn't care less about City. With that 15k, I could do miracles. I could turn that 15k into 100k in less than 3 months. Guaranteed. Well, not guaranteed, but I reckon anyone wants to give me 15k, I could turn it into 100k in 3 months. I'm not saying give me 15k, but I'm just saying. managed to turn 5K in February, I managed to turn 5K into 78. So that's all I'm saying. Juve is not the team they were. PSG should be winning. On paper, PSG has got the best team. Actually, tell a lie. If you take the team in PSG, but you wind them back 3 years, it's got the best team the world's ever seen. Neymar, Mbappe, Messi, in their pomp, in their heyday. Come on. But Messi's past it. Neymar is not what he used to be. Mbappe's still good, but he's never as good as Neymar and Messi at their best. He's got an overinflated ego. He thinks he's better than. Who in the right mind thinks they're better than Messi? Come on, Messi, the greatest of all time. Oh, sorry, Matthew. I don't do gold. I don't do commodities. Well done, yo. Well done. I don't do gold. I don't do commodities. Alex, come on. Let's have a look at HKD. It might be worth a punt. No, it's not. The HKD of August. That's actually not a bad. That's not a bad. No, I totally agree, Tamimi. Nobody should even compare Mbappe to Messi except Mbappe. In fact, nobody compares to Messi. I've seen some players over my many years of watching football, and Messi is the GOAT. Messi is the greatest player to ever have graced a pitch full of turf. It really is. I'll leave Alex alone. He's only messing. Datadog moving up. MGM had earnings. Didn't go too well. Fastly had earnings as well. Shit, I'm glad I weren't looking at that. How are you going to trade that? That is the definition of choppy. How can you trade that shit? That is terrible chart. Come on, Fastly, sort your life out. DocuSign. I wouldn't mind getting in at 43.40s maybe. 43.50, break it a $0.50, and then get rid of it up at the top at 46. I should have got rid of bloody Roku when I had the chance. No, I totally agree. Although. Oh, I'll tell you what, Swifty. Peter Crouch he's the GOAT in many respects, but certainly not as in terms of a footballing context. He is a good player. To be fair though, with Peter Crouch, he is the most gangliest, awkwardest, good footballer you're ever going to come across. He should never been a good footballer, but he was. And it was like, he just was all wrong to be good at football. Yeah, the DocuSign 1 minute chart, that's first minute after close. That's shocking. I really should close the stream and do my my trade recap recording, but do you know what? I'm enjoying myself. Yeah, Messi in his era. The best player to grace a blade of grass is Lionel Messi. And as an England supporter, as an Englishman, I was old enough to witness Maradona in his pomp. That's saying something. Maradona comes second, Pele comes third, Ronaldo barely makes the top 10. And people talking about Ronaldo's a great goal scorer, probably one of the best goal scorers in history. He's not one of the best footballers. Not even close. I could name at least 5, maybe 6 players better than Ronaldo as a football player. Messi is head and shoulders above Ronaldo. He's not got as many career goals. He's not been playing as long, but he's not got as many career goals, but he's got way more assists. He's able to turn a game on his own. He's able to carry a team on his own. Ronaldo's not done any of that. You look at why Messi is one of the best of all time, because he learned from one of the greatest of all time, and probably one of the most underrated footballers of all time, in Ronaldinho. Ronaldinho was an amazing footballer. He on his day, and the problem with him was he was lazy, but on his day, he was unplayable. Shut up with your Harry Maguire. Look, Ronaldo, he is, like I say, he's one of the best goal scorers of all time, and he's not just he's not a goal scorer, not a great goal scorer. He's a scorer of great goals as well. So you can't, as much as I hate his United connection, his Madrid connection, and I hate Ronaldo because he's a cocky motherfucker, but I didn't say that. YouTube don't monetize me. I didn't say that. But Ronaldo is probably one of the hardest working footballers of all time. And what I mean by that, he's worked hard to become the player that he is. Messi's just naturally gifted. What you see with Messi is probably the most naturally the best football player you'll ever see in your life. He could, I mean, the way he destroyed United in the Champions League final, was it 2012? Oh, man, that was masterclass in individuality. Really was. Anyway. Back to, where's the volatility? eBay. Where can I put some big money and get some big returns? Maybe not eBay. You know what? I'm going to quit 15 grand down. I've recovered from 15 grand. I'm done for the day. It's probably the wise decision is to quit 15 grand down and do my trade recap with a tear in my eye. Okay, anyway, I'll be back at it tomorrow. I'll be 90 minutes before the market opens, so if you're in the North America, that's 8 a.m. your time. If you're in Europe, it's 12 p.m. my time. Or UK, Dublin, it's 1 p.m. if you're in the continent of Europe. So I'll be finishing off my wine. I've still got half a bottle to finish, so I'll be doing that. I'll do the trade recap. I'll be loading up the 13 grand BA trade, 12 grand BA trade. The rest came afterwards. I'll be loading the 12 grand Boeing trade on the trade recap. Be sure to go and check that out. That's on YouTube. So if you're watching on Twitch, if you're watching on TikTok, if you're watching on any other platform, go and check out my YouTube channel. Go and subscribe to my YouTube channel. I drop, not just do I go live there, but I drop trade recaps every day on YouTube. So go and check that out. And I'll see you tomorrow, 90 minutes before the market opens. We do it all again. And hopefully I'll be able to recover this 15K drawdown that I was stupid enough to take in the first place. Okay. Catch you later, guys.